Hey everyone, welcome to 3-Minute Tax Tips. My name is Jake Adams with Realtor Tax Strategy. Today we're going to be talking about saving for kids' college. Before, you've probably heard of 529 plans or universal life plans, which say that they have lots of tax benefits or as a tax strategy for helping your kids save for college, but I'd like to show you a different option. So, as I mentioned in all my videos, this material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction, and especially tax strategies such as this. So let's talk about the benefits of saving for kids' college. So some of the benefits include it's a huge tax deduction. We'll get into the numbers a little bit later. Also, the money invested can be invested in a traditional or Roth IRA and can be used for college within just a few years. The disadvantages, however, you must have cash flow. And the kids have to have earned income, hopefully out of the businesses that you have. And then they also have to process payroll twice a week. There's also a couple forms to fill out. You also have to get the IRA set up, and there's a couple IRA custodians that can help you out with that as well. So there's two options available for you. One would be a traditional IRA, the other would be a Roth IRA. So with the traditional, there's a tax deduction in the year that you invest the money, and you also would pay tax when distributed. The traditional grows tax deferred, and you could use it for medical expenses or $10,000 to buy your first home. And of course, as we're talking about here, you can also use it penalty free to save for college or to pay for college. With the Roth IRA, there's no tax deduction in the year that's invested. However, it is tax-free when distributed. So depending on how much you're going to be putting into these IRA accounts, it is important to strategize as far as how much money is going to be distributed and what the tax implications of that when it is distributed. As a Roth IRA, it's going to grow tax-free, which means any money that it makes in interest or growth of the stocks while it's in there is going to grow tax-free. You can also use it, just like traditional, for medical expenses or $10,000 to buy your first home if any of those come up before college. So let's run through some numbers. And again, why are we doing this? We're shifting income from your bracket to their bracket. So an example would be $6,000 of wages and $5,500 to an IRA, which is the maximum. So let's run through some numbers. Here is the before. Your income would be $150, expenses, let's say $40,000, your profit is $110, your tax bracket is $25, and your federal tax rate is just shy of $24,000. After we pay $6,000 of wages and $5,500 to IRA for our kids, our income is going to be decreased to $98,500, still at a 15% tax bracket. However, here we can see the federal tax is only $20,487, which is a tax savings of over $3,000. As you can see, as the money passes to your kids, they have a wage income. The IRA deduction, this is for traditional, so your traditional IRA is going to have the tax deduction for it in the year that you're making the contribution. Tax bracket again at 0, federal tax is 0. So hopefully that makes sense, and if you'd like to visit this, I'd love to talk to you about it, or please mention it to your tax or financial advisor. This is a great strategy to help you save thousands of dollars every year on your taxes. Thanks for watching.